You know, we've just spoken to Martin about investment strategy long term, and you know, I was saying that we spend so much time fixated by all this information that's available. So now with you, we're going to take a little bit of a look back and try and perhaps calm down about everything and see where the second quarter was. And let's start with Europe, seeing everyone's talking about it.
Yeah, I think, look, the market got to a good start at the beginning of the year. Economic data was positive, but certainly as we moved into the second quarter, we started to see a slowdown in manufacturing activity. GDP numbers missed forecasts in China, India, and obviously also in the Eurozone, looking like it was certainly going into a recession again. So that impacted markets, and being as sensitive as they are, we've seen the value or the risk trade off now, and it's had a major impact on South Africa in particular, being a resource-heavy index. We saw some pretty nasty fallback in those sectors.
Looking at the Europe issue, I mean, it's been going for a long time, and people say, well, the risk is now priced in. What the problems that they are going to happen have already been priced in. Were they pricing these things in 3-4 months ago?
I think so, but I think they probably thought that Germany would soften their stance with regard to this Eurobond issue. I think, though, it's very much a political game at the moment, and obviously with Merkel having some setbacks on the elections or the sort of by-elections, she's been very cautious to change her stance on this Eurobond issue. What we have seen in the last few days, though, that some of her allies have come out to say that they do favour some sort of Euro bond pool. So maybe a little bit of a, not quite ECB bonds, but certainly some combined assistance to these countries that are struggling.
What about the expectations of easing? And it's almost as if it was taken for granted that this would eventually happen and more money would be poured into the system.
Yeah, I think certainly, as I said, the economic data over the last few months has been poor. The economic surprise index in the US, which measures how forecasts have matched against actual numbers, that has dropped off very, very sharply. So I think analysts were perhaps overly optimistic about the economic recovery. And as a result of the slowdown, everybody was anticipating some sort of easing. Now, you had the ECB stay flat, the UK yesterday stay flat, and then last night Bernanke saying, look, QE3 is probably not coming, but we're standing ready to act, and likewise the ECB said the same. I think personally that what they will do is probably extend the Operation Twist, try and flatten that long end of the yield curve. And I think that's why we're seeing the US consumer holding up relatively well in this market.
What about the China rate cut, which came as a surprise?
Yeah, there's been a lot of speculation about that. Earlier on, I think they spoke about the fact that maybe that indicates the data that they're going to release tomorrow is probably going to show some weakness in that economy. But I think the big plus for the Asian economy is, unlike the developed markets where you've got very, very low interest rates, in Australia, Asia, interest rates are still, sort of the 3-4% level. So there is lots of room for them to maneuver. And I think the Chinese authorities had given that indication a week ago that they were prepared to step in to support the global economies by monetary stimulus, etc. So I think it was well expected.
What about South Africa? Because it's striking that the bad news has been around for quite a while, but our stock market hit a record high, the all-share index. The companies keep reporting very good numbers. Absolutely. I mean, there are very few companies actually in the last months that haven't come out with 20% increases in earnings, but trouble stored up down the line, perhaps.
Yeah, I think, as I say, people are given the risk situation in the global economies, are scared to pay up. So we've seen a derating of our market right across the board. Valuations in our market, as you say, given the strong earnings that have come through, look particularly compelling. And likewise, I think South African companies' balance sheets are very, very strong. We've seen special dividends from a lot of the companies. Sterling results out of Richmond, which I think were unexpected. So our companies are doing well.
What about a Barlow world? You know, that would seem to go against the long-term trend of, Europe, no demand, deindustrialization in South Africa. Someone referred to it yesterday. The Invicta chief executive talked about South Africa is deindustrializing, yet we have a Barlow world which is looking very positive and a big increase in earnings and good share price performance.
Yeah, I think that they were coming off a very, very low base. I think for many years it had fallen out of favour. There were changes at the executive level. I think people were perhaps a little sceptical about that. But they've made a few acquisitions now which have strengthened their hand. And I think maybe the strong run in Barlows really came at the end of last year, where people were expecting that this economic recovery was going to gather momentum. So personally, I wouldn't be surprised to see some sort of tapering off in that outperformance of Barlows from now going forward.
Politicians in the process. Martin was talking about the invisible hand of the markets and the visible hand of the politicians, and his view clearly a moment ago was that the politicians are distorting things in Europe and still not going to solve the problem, simply putting off the solution.
I think that's absolutely right. I think if we think back over the last couple of months, the politicians have really played a very hard endgame. And in the US, when they were trying to extend the debt ceiling, they played it right to the end, which really unnerved markets. There are a lot of vested interests there. And I think even last night, Bernanke, he warned the politicians to say, coming early into the next couple of months, when that comes up for review, they need to be very careful about trying to curb that fiscal spending, because just at the time when you need that fiscal spending, you don't want to be reining that back in again.
Given the record of Bernanke over the past period, he's been watching and waiting. His comments seem to indicate, or what's been interpreted to indicate, that they may help, but they're keeping an eye on things. And more it seems to hinge on what the Greek election does, never mind the Spanish banks and other things. But June the 17th, that's the day. Now, the implication is that when the US says, OK, now we step in. We come to the rescue of Europe as we did before in 2 world wars.
Yeah, look, I think everybody, I think the Eurozone, I think the US are all waiting to see the outcome of that result before they commit themselves to any firm action. I think personally that as Bernanke, I don't think will act. I think if I look at the numbers, while the labour numbers disappointed last week, in general that market's been recovering. They are creating jobs. But I think more importantly for me, what I'm very happy about is the stabilisation in the housing market in the US. And really that was what took us into the bear market in 2008. And I think that's what needs to take us out of this current sort of...
And you're not the first person to say that this afternoon, so that's encouraging. Finally, platinums. It's become the sick man of the commodities sector. What's going to happen with platinum?
Look, they've been absolutely thrashed over the last couple of months, along with the other resource stocks, but platinum has certainly been a standout. What I did hear yesterday, one of our analysts was talking about, and he said the problem with the platinum industry at the moment is that the ROEs of the companies are below their cost of capital. So what we've seen over the last couple of weeks and months is a lot of projects being put on ice, review of operations, and as a result of that, there's been a lot of negative outlook with regard to the results that we might see from the platinum producers going forward. But from my point of view, I think that's a good thing. We're taking a lot of production out of the system, and those big players like the Amplats, the Implats, I think are well positioned. They've got the reserve bases, and I think there is good deep value there, but it might take some time to actually realise those, for that value to unwind.
Well, encouraging for the platinum sector. That was Craig Massey, Director of Stockbroking at SPI.